In our consumer news today, the government shutdown forcing the Federal Reserve to make its latest interest rate decision without a key piece of data. Karen Caifa takes a look at what yesterday's announcement means for your wallet.
The Federal Reserve making its latest decision on interest rates without the full picture of how the U.S. economy is faring.
There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate.
The ongoing federal government shutdown has suspended most of the economic data the Fed relies on. That includes the Labor Department's jobs report for September, which should have released October 3rd.
It's not to say that we don't know what's happening with the U.S. economy right now, but we would have a much better idea and a higher degree of confidence if the federal government were operating and releasing the data that we're accustomed to getting.
The Fed can lean on employment data from the private sector as well as its regional banks. And while government inflation data for September did release last Friday, Bankrate's Mark Hamrick says the labor market is really in the Fed's focus.
Inflation is rising at an annual rate of 3%. That's still a long way away from the Fed's 2% target. But the Fed is primarily concerned now about a job market which has essentially frozen.
Justin Wolfers, professor of economics and public policy at the University of Michigan, says the central bank will likely take upcoming rate cuts with caution.
What it's doing right now is actually just taking its foot off that brake and moving us back to neutral. We'll coast for a little while until we can figure out what the next step needs to be.
Meaning, economists say consumer relief on mortgages, auto loans, and credit card debt will come slowly, too. In Washington, I'm Karen Caifa.
The government shutdown could slash economic growth and cost us billions. A new Congressional Budget Office report warns the shutdown will cut GDP growth by up to 2 percentage points this quarter. That means the economy could lose up to $14 billion, depending on how long the shutdown drags on. The CBO blames several factors: fewer services from federal workers, less government purchasing, and lower SNAP benefits. Paying rent could soon be as easy as Venmoing a friend. PayPal is partnering with Bilt Rewards to let you pay rent and mortgages directly through Venmo. You'll be able to pay from either app using your Venmo balance, bank account, or card. The feature rolls out early next year. Today, the Senate votes on President Trump's Liberation Day tariffs after the Senate passed a symbolic resolution to end Trump's tariffs on Canada. 4 Republicans joined Democrats in rebuking the administration's trade policies. The measure aimed to terminate the president's emergency declaration, but the House isn't expected to take it up quite yet.